Hi everyone, and welcome to today's webinar, How to Successfully Manage Your Renewal Book. My name is Alexa Hill, and I am the Marketing Manager here at CID. Today we have two of our underwriters joining us to share their expertise on how to manage your renewals. We have Jessica Swigart, our Senior Commercial Renewal Underwriter, and Bri Terriquez, our Junior Commercial Renewal Underwriter. So before we jump into our presentation today, I just want to quickly go over a few logistics for today's webinar. So as you can tell, you are all muted, but there is a chat feature where you can type in your questions and we'll answer them throughout the webinar. Your voice is very important to us and we want to make sure all of your questions are answered, so please feel free to chat them in at any time. We are going to do a couple polls throughout our webinar today. So we are going to do a little fun one first, just to make sure all of our polls are working properly. So you should see it pop up on your screen. And the question is, do you prefer coffee or tea? You can answer and then submit. Okay, well, it looks like they're working good. So without further ado, I will pass it off to Jessica to get us started.
Good morning, everyone. I'm Jessica, the Senior Commercial Renewal Underwriter here at CID. Today, we're going to go over how to successfully manage your renewal book, which will include best practices for maintaining an expiration report, our tips for staying ahead and on top of renewals when it comes to remarketing, non-renewals, and any unexpected curveballs. We are also going to go over securing the renewal bind and how our office can help rewrite expired policies and cross-selling excess liability coverage with your renewals. The most successful tool in managing your renewal book is implementing an expiration list to track your renewals. If you don't already have a system in place for this, I suggest starting a spreadsheet through the platform of your choice, and as you bind new or renewal accounts, add them to a spreadsheet. We'll go over key components for an expiration report in the next slide. The most common practices are tracking on a monthly or quarterly basis. I personally find success with tracking renewals on a monthly basis, as it allows me to manage the different stages of each renewal multiple months at a time. It's also a good idea to have an alert system in place to stay on top of each account, whether that be through an agency management system or through your email. Another important part of managing your renewals is maintaining a file for your insured. This can include fillable applications, loss runs, and other important documentation pertaining to the risk. You never know when a policy may require changes or remarketing, so it's best to have a paper trail of the policy's history for reference. Being able to manage your renewal book also includes staying on top of accounts that could be a problem or require more legwork at renewal. This could be due to outstanding loss control, a potential audit, or claims that could impact the ability for a carrier to offer renewal terms. Now we're going to dive more into the best way to set up an expiration report. Expiration reports should contain key information about each account to make them easily identifiable when you go to work them. While this is not an all-inclusive list, I would recommend including the insured's legal entity name and their DBA name, the expiring policy number with a separate line for each policy if the same insured has multiple policies renewing at the same time, the line of coverage, expiring carrier information, and expiring premium. Please also keep in mind that there may have been endorsements throughout the policy that may have an impact on the expiring premium you have on file. If an insured has multiple policies for different locations, then it may also be a good idea to include the location address on your report for better tracking of each policy. Now I'm going to hand it off to Bri to dive further into the renewal process and remarketing.
Hi everyone, my name is Bri. I am the Junior Commercial Renewal Underwriter working alongside Jessica. We'll be discussing the importance of starting the renewal process early and how this impacts different scenarios that may surface. As discussed on the previous slide, expiration reports are most useful when organizing policy information by date order. This will help pinpoint how early you need to begin working policies that may require more attention. Keep in mind that there is such a thing as too early. While it may seem efficient to begin the renewal process several months in advance, it's possible that a quote may not be immediately provided. This is because the quote will only be valid for a certain period of time, so our goal is to provide a quote that remains valid through the expiration date of the current policy term. At the start of the renewal process, it's recommended to get in touch with the insured to go over any potential changes to the risk and confirm the policy information is current. As Jessica mentioned, maintaining an updated file for the insured makes the renewal process easier. Policy information should be easily accessible so that details can be quickly relayed to the underwriter for quoting purposes. This practice is also helpful in the event that a notice of non-renewal is issued. If a policy is set up for non-renewal, it's important to relay updated account information to your underwriter as soon as possible so that there are no delays in their remarketing process. It's also helpful to consider the insured's specific needs. For example, if the insured is difficult to get a hold of, this would be an account that would benefit from an early start. It is also important to ensure the client is available at time of renewal. We often experience delays in quoting or binding when the insured is unreachable for an extended period of time. Not only is it important to maintain communication with the insured, but whether you're working with a wholesaler or directly with the carrier, you will need to relay information accordingly. Before we move on to the next slide, we'll be asking a quick poll question, which asks, when do you start working your renewals? So we recommend reaching out to the insured at least 60 days prior to the expiration date of the policy to obtain accurate information. It is helpful to refer to the current term policy and midterm endorsements to view the different exposures that may affect the rating basis for each line of coverage. For example, if a payroll-driven policy has been endorsed several times to account for employee changes throughout the year, it's important to carry these revisions over on the applications. Once the rating basis is determined, verify if there are any other changes to be made at renewal. This may include changes to the additional insureds, mailing address, location address, and the named insured as it is listed on the Secretary of State or the deed to the property. Another reason that obtaining accurate information is important is because the policy may be audited. If the rating basis of the policy was inaccurate, the carrier will charge additional premium for the exposure difference on that policy term and may also require an additional premium endorsement on the current term. There are various reasons that a notice of non-renewal would be issued on a policy. Fortunately, there are opportunities to remarket with other carriers depending on the reason for non-renewal. In order to remarket, the reasons specific to the non-renewal must be addressed. For example, if the insured is being non-renewed due to loss control non-compliance, the outstanding items will still need to be addressed prior to binding coverage with a different carrier. In other cases, non-renewals may be issued due to failure to comply with an audit requirement. If the account can be remarketed, it is important the insured understands that an audit would be required regardless of where the coverage is placed. Going over what to expect at time of audit with the insured helps avoid delays and potential non-renewals. It's important to note an underwriter cannot always remarket based off of expiring information, which is why a full submission is required in these circumstances. In order to remarket, fully completed accords, a supplemental, accurate information for the rating basis, and currently valued loss runs would be required. If the non-renewal is due to loss history, the underwriter would need details surrounding the circumstances of the claim. It's possible that carriers would request additional information, so it's important to stay on top of non-renewals so that there's sufficient time to request the necessary details from the client. If the requested information is not received, it is likely the non-renewal will stand and the policy is at risk of a lapse in coverage. We want to avoid lapses in coverage, which is why it is important to get ahead on the accounts that require attention. Having a lapse will make it more difficult to remarket and may result in limited carrier options. Oftentimes, we receive requests to shop the account a week prior to the expiration. Unfortunately, this may limit our carrier options due to time constraints. We may need to submit the risk to the carrier, so it's important to consider that additional time is needed if the insured would like to see multiple quote options. Sometimes the client may request the policy be remarketed. However, it is important to be transparent with the insured. While there may be opportunity to save on premium by remarketing, it's possible that the new carrier would charge additional fees, which would offset any savings. That being said, if there is a target premium or additional coverages the client is seeking, this information helps us determine the best placement for the risk. Sometimes it may not be in the insured's best interest to remarket. One example is that the insured may have coverages that have been grandfathered in with their current carrier, and these coverages may not be available with other markets. Another instance is if the policy is at minimum premium with the current carrier, then there would be no benefit in shopping. Remarketing an account is not always advantageous, so it's important to be transparent with your insured and educate them on what to expect of the current market conditions. As you can see, a lot of what was covered in remarketing non-renewed policies also applies in remarketing for the purpose of shopping the account around. While we can sometimes work to remarket based off expiring applications and exposure information, it is best to provide updated applications in the event that the insured wants to shop the renewal, especially if it is an account where applications have not been required for several years. Some carriers require a full submission via email to obtain a quote, so we don't always have the ability to quote risks in-house. Even if it is a risk we can quote ourselves, a referral may still be required and applications would be necessary for the carrier to review. So once a quote is provided, please ensure that all terms and conditions are understood by the client. If any corrections are needed, it's important to relay this information to your underwriter as soon as possible, since changes in exposures may impact the premium or eligibility. If the insured intends to finance the policy, the finance agreement should be updated accordingly based on the final quote version the client wishes to bind. If you have questions on how the billing terms work, please contact your wholesaler or carrier prior to remitting payment to ensure a seamless process. For any signatures that are required, these should be done by a wet signature or through a verified electronic signature platform such as DocuSign. If it is a typed font with no electronic signature verification, it's possible that the documents may not be accepted for binding. Now I'll be handing it back over to Jessica to talk about rewrites and cross-selling opportunities.
Thank you, Bri. If the policy has expired, it does not mean it's a lost cause. While some carriers don't allow for lapses in coverage, I would argue that most surplus lines markets will consider quoting accounts that have lapses, as long as the insured has remained loss-free for the lapse period. Terms will always be subject to a completed, signed and dated, no known loss letter for the lapse in coverage through the date in which the insured gets coverage back in force. Depending on the risk and the amount of time coverage has lapsed, a new submission may be required to get terms, so keep that in mind when an insured reaches back out. Most importantly, the insured may not always be able to get terms same as expiring, as the risk will need to be requoted, whether that be through the previous carrier or a new carrier, which could impact premium, coverages, and forms. Also keep in mind that some carriers do surcharge for lapses in coverage, and any previous loss-free credits that the insured may have had previously will be removed. Now we're going to do another quick poll question. Are you currently offering excess liability coverage to your clients? All right, thank you for your responses. So we have seen an increase in quote requests for excess liability, and a lot of our markets now have the ability to offer optional excess liability quotes in conjunction with the renewal offer. This has allowed a great opportunity for cross-selling. The items listed on the slide are some of the more common reasons we get requests for excess liability. Of these requests, the most frequent need for excess coverage is due to contractual requirements. When meeting with your insured to discuss their renewal, it can't hurt to double check if they have any contractual agreements that may require them to have higher limits. Even if it's not required for the insured, it can't hurt to have the conversation to see if this is something they may want to consider, even if it's just for peace of mind. We're happy to help to try to quote excess liability with your renewals, and a lot of the time we can work off minimal information and paperwork to get terms, as long as we already control the underlying policy. Now I'm going to pass it off to Alexa for closing remarks.
All right, thank you, Jessica. If anyone has any questions that weren't answered during the webinar, now is the time to chat them in so we can answer them before we sign off. We did have one question from our registration, and that was, how long does it usually take for you to remarket an account?
So how long it takes us to remarket an account really depends on a variety of factors, which includes the type of risk it is, the coverage, and what markets we can approach. If it's a carrier that we can quote in-house that does not require carrier approval, then sometimes we can get a quote back same day, if we get that remarket in the morning. But if it's something we have to send out to market or requires a carrier referral, then it would depend on the carrier's turnaround time, which does fluctuate with the state of the market. I would say ideally we'd like to have at least 2 weeks when possible, but we know that's not always the case.
Okay, great. Jessica, do you see any other questions that are popping up in the chat? I'm not seeing any, but I just want to double check.
I do see we just got another question. That's what are the in-house carriers? So this will depend based on your wholesaler. But for us, we do have some carriers that we can quote ourselves, meaning we don't have to send a full submission via email over to a carrier. It's a carrier that we rate up on a carrier's website. Just because we can quote it in-house, though, doesn't mean it won't require approval from the carrier. So it kind of just depends. But typically, we have more success with getting things back quicker when we can quote it ourselves. But it just depends on the risk and what carrier we can take them to. And I
Okay,
do see a
great.
follow-up to that question. What risk can you quote in-house? Pretty much all of our products for at least commercial lines. We have access to some market that we can quote in-house, but most of those are surplus lines carriers.
Okay, great. Then if any questions do come up later on, you can always reach out to Jessica or Bri after the webinar. They would be very happy to answer any questions that you do have. So I do hope that you learned a lot of valuable information when it comes to managing your renewal book and how to make the process more efficient for your agency. After this webinar, I do encourage you all to browse our website at cidinsurance.com. We have tons of tools for you and your office to use. And then if you do have any submissions sitting on your desk, you can send them over to our submissions email at submissions@cidinsurance.com. So if we don't have any more questions, then that will do for today's webinar. We appreciate you all joining us and look forward to doing business with you. Hope you all have a great day.